We're, a quarter of the way into the year so far, and there's a question as to how well the economy is doing. We're clearly going through a soft patch. Data late last year was pretty weak. Data at the beginning of the year was a little bit weak as well. So we see a pretty significant turnaround in growth dynamics, essentially as of the second quarter. So one thing to keep in mind when folks talk about the outlook is to really kind of focus on what's been driving growth. And in Canada, there are three things really. Oil prices, which are really quite strong, a rebound in equity markets, which helps everybody. And we've got this massive energy project coming online, or beginning to be built in Canada in the second part of this year, going into 2020, which is going to add significantly to growth both this year and the next year. So the kind of fundamentals are reasonably well aligned in Canada. And on top of that, you've got fantastically strong job growth, wages are starting to rise, business capital intentions are significantly positive. So all this suggests that there is room to grow, and that firms are willing to grow, and that households have the income to spend if in fact they're inclined to do so. And that to us really provides a great degree of comfort as to the dynamics of growth as we go forward. So we think we'll avoid a significant slowdown despite some of the fears in the market because of these factors. When we develop an outlook, we look at a range of things. We look at economic data, we look at financial markets, we look to our experience, we look at conversations we have with clients. We bring all that together when we develop a view, and all that information is not substantially different than what we've been hearing over the last few months, which is to say that there are signs of vigor in lots of parts of the economy. There's parts of the economy where there are capacity constraints. There are parts of the economy that are starved for capital, starved for labor. All this suggests that there is reason to be positive as we go forward. But as you kind of look at fundamental drivers of growth, so monetary policy is still very accommodative in the US, in Canada, and other parts of the world. There are signs of kind of robustness in the labor market in various parts of the world. There are signs that business confidence is turning a little bit in various parts of the world. So all these things suggest to us that kind of recession fears are dramatically overblown, and that we are still in reasonably strong economic expansion. One that's going to be slower than it was last year, without any question, but one that's going to remain in place for at least this year, as opposed to those who think we're set for a very significant downgrade in growth. So in a lot of ways, the most critical factor at our outlook is beyond our borders. It's what's happening between China and the US. They're seen to be in the final stages of negotiation now. If that concludes as we expect, that's a pretty good marker that growth will improve as the year progresses, because you're taking this big risk off the table.